Hi, I'm Asif Farouk of Finextra and I'm joined by Jeremy Light of Accenture. So how are the proliferation of digital channels transforming the payments business in your region?
Well, Asif, the key trend at the moment is that we're at the next stage of connectivity in digital interactions. So to give an example, taxi apps are popular nowadays where through your smartphone you can call up a taxi on the street, it'll arrive, you just get in it, do the journey, get out, and it's paid for automatically, usually on your card. And that's an example of connectivity between yourself, the taxi, and the payment company, all in one overall digital interaction and experience. And that is the stage we're at the moment, and that's going to proliferate in all sorts of apps and ecosystems. It's changing the way we interact with each other, with organisations we want to deal with. It's changing the way we shop, it's changing retail, and of course it's changing the way we pay. And here in Europe, I think there are two key trends that are profound. One is the growth in contactless transactions and the adoption of contactless, which I've talked about before, but it's growing at 300–400% per annum, admittedly from a low base. But if it continues at these hyper-growth rates, within 2, certainly 3 years, we'll have mass adoption of contactless transactions. And once consumers are used to paying by tapping their card, it's a relatively small jump to start tapping your phone. And all the infrastructure is in place, so NFC could well take off, and mobile payments will take off. So that's one profound change. The other is around real-time payments. Real-time payments are very different from real-time authorizations because they're really the equivalent of paying cash electronically. And here in the UK, with faster payments, real-time payments are growing. Well, there will be over 1 billion transactions this year. They're also in Poland, where the adoption is a bit slower, but there's a general trend towards real-time payments that will also have a profound effect on the way we pay here in Europe.
So have banks in your region been slow to respond to the massive amount of change brought about by digital channels in your region?
Well, I think it's all relative. I mean, retail banks don't move quickly, but then again, smartphones have been around for barely 5 years. And then on the other hand, you've got investment banks who deploy technology in a very sophisticated way and very rapidly. And I've talked about real-time payments. In investment banking, they're talking about high-frequency trading and moving from microseconds to nanoseconds. So I say it's all relative. And one of the key differences between the two is that the profit pools in payments are lower because it's more of a commodity. And secondly, with retail payments, you've got to take the consumer along with you, and there's huge consumer inertia to overcome. And that is one of the reasons why the successes in mobile payments and digital payments that you see are relatively rare at the moment, despite the large investments that both banks and non-bank new entrants are making. And I think one of the key stumbling blocks is around cards. I mean, cards are very important to help transition to digital payments, but they do have limitations. And one of the issues that banks have is that whenever they come up with new propositions, not only is there a cost in the business case, but quite often they see that there's going to be cannibalization of card revenue, which is an inhibitor to innovation and to the pace of change. And I think one of the ways that banks can overcome this is to look at alternatives in particular, and this I think is the key message, is to look at exposing their core payment systems through APIs, through application programming interfaces, to allow others, retail apps and third parties, to proliferate your payment mechanisms. So for example, instead of just simply registering a card in a retail app, you could register your bank account. And then through APIs, not only can you make a payment direct from that bank account, but you can see the balance before and after the payment. You can select which account you want to pay from, and you can do things like request refunds or ask for credit and so on. And I think the route to innovation is to expose your core payment systems through APIs for retailers and other third parties to embed in their apps and then proliferate for you.
And what do you think banks in your region are doing right?
Well, I'll say there are a number of things. First of all, they're exploiting mobile banking. And this is an example where banks are exposing their core banking systems through APIs to mobile banking apps, and we're seeing mass adoption here in Europe, not just here in the UK, but in other countries such as Italy and France and Germany, where there's mass adoption of mobile banking, and that is leading to a completely different way that consumers interact with their banks. Historically, with a branch, they may go in once a month. With online banking, maybe once or twice a week. But we're seeing with mobile banking that they're logging in, typically once a day or 30 or so times a month. I think the other thing that banks are doing right is they're investing. They're investing in their merchant acquiring capabilities, particularly around e-commerce and mobile commerce. We're seeing all sorts of initiatives such as Barclays with Ping It and Buy It, I think it's the next evolution. We're seeing banks forming partnerships with telcos in Spain, in Belgium. And there are some very innovative countries, like, for example, Turkey, which the banks are being very innovative there. I think the other things they're doing right is, as we said, with contactless. I mean, contactless is becoming a de facto norm now. Infrastructure's being rolled out on the merchant side. Banks are issuing contactless cards, and as I say, that will lead to mass adoption, or eventually, of mobile contactless payments. And I think finally the thing they're doing right is that they are fixing their payment systems, and this is sort of more in Europe, more coincidence or as a consequence of SEPA, where they've had to either re-platform their payment systems to consolidate everything into one architecture, or to simplify their existing ones. But that will allow them to process real-time payments, and it will allow them to expose their APIs to third parties, which I think are key to success. So I think to summarise what banks need to do is they need to exploit contactless, they need to target mass vanilla transactions, which these core payment systems they've implemented can handle, and they need to expose their APIs to third parties in order that those third parties and retailers can then proliferate their payment capabilities.